Hey, hello, folks. Welcome to Pro Trader Strategies. My name's Eric Wilkinson, and you're at Spotting the Trade. We're going to get you what you need to know before you go, and that's going to be talking about economic data, how that impacts the overall markets with a little market analysis, maybe sprinkle in a little geopolitical fodder to round off all that market analysis, and then talk about some option strategies we could implement into a portfolio based on the assumptions we've come up with in our market analysis. All right, so without further ado, let's get on with the economic data. A couple of things I want to talk about. This is a very busy week for economic data and talking heads for that matter. Today and tomorrow is basically the meat of the talking points and the economic data. Tomorrow really is going to be the big day for economic data here in the United States and across the pond. We get the Flash Purchasing Managers Index, which is very forward looking. Those are the numbers that I like to look at there. As a matter of fact, those numbers are coming out on Friday, not today. And as a matter of fact, Friday is going to be a little bit of a funky day because I have a feeling that is going to be a very light volume day. We've got the 4th of July holiday coming in on Monday. Friday, a lot of folks are probably going to be leaving and or not even coming in. So Friday with that economic data, it's going to have an immediate reaction, but I have a feeling there's going to be not a lot of follow through with that, at least with volume, because folks are going to get their business done and get out the door there. All right. So with that said, here in the United States, we did get our final GDP numbers coming in at negative 1.6, expected to be a negative 1.5, so worse than expected there. Not really anything to write home about. As a matter of fact, we saw the prices paid for the GDP coming in higher than expected at 8.2, expected to be 8.1, and that is a tick higher than last month. So continuing to see higher numbers on the prices paid. As a matter of fact, we can go back to the Richmond Fed. Remember, I talked about the Richmond Fed yesterday and how that economic data point was going to be one of those manufacturing numbers that we are looking for forward guidance. You know, a lot of these have kind of waned a little bit. Richmond Fed, again, coming in negative at negative 19, expected to be negative 4. So a big, huge miss yesterday on that headline number. Now, when they came back and revised, they've said basically that they made a mistake, folks. Sorry, they made a mistake here on the economic data point. As a matter of fact, they released it with their expectations of prices declining over the next 12 months from manufacturers not able to pass on those higher prices to the consumer. Well, that was a misprint. As a matter of fact, Bernhardt reached out to the Richmond Fed to tell them that their data was wrong and that they miscalculated this information. So they revised it, came out a little bit later and said manufacturers actually increased their prices 4.6% over their cost, which are in line with their costs, I should say, which increased at 5.4%. So what this is really telling us is giving us a little bit of a better insight as to what these manufacturers are going through right now. At first, we thought it was really bad. The revision's not so bad. They're able to pass on some of those higher prices, but we can see if they're raising their prices 4.6% and they're experiencing 5.4, they're losing almost a full percentage point to the economy there. So with that revision coming out, it did kind of calm some folks a little bit, I would say, but it did not slow the markets down from the sell-off yesterday. As a matter of fact, folks, if you've been following this for a couple of months, I mean, I don't pat myself on the back very often, but man, I've been telling these intraday moves even almost at this point. It's kind of scaring me as well. So, all right, let's get on with the markets and take some look at some market analysis here. We've got crude oil futures moving a little bit higher here. Again, you guys, this is the nail in the coffin of an economy right now. Is crude oil. It continues to climb. It's going to continue to hurt the economy. There's just no way around it. It's going to create higher prices across the board. That's where we're seeing some of these inflationary gauges. We've already even seen folks talk about not spending as much on we're hearing this out of Starbucks that folks are not buying ancillary products. They're just buying the main product that they're going in there for. So a lot of these things that we used to spend a little bit of extra money on in different places is showing up in the numbers now that we are not doing that. And I believe that that crude oil is the thing that's going to be driving the nail in the coffin of the economy. We're already right there at a recession. That's going to really exacerbate everything, folks. A lot of people are trying to say we need to get away from fossil fuels, but there's a timing for everything. And right now is not the time to be talking about that, because it's going to really drive prices across the board higher. There's just no infrastructure ready for electricity, for cars. That's just something that the governments are trying to push that is a little early, to be quite honest. Gold futures moving higher. I don't know if it's anything other than it's finally starting to make some moves there. Folks, the institutional investors are sitting on cash. They don't want to invest anything right now. I think that is a good sign that we're getting ready to allocate these monies. They think that there's going to be a timing thing where they can get in there and start pumping all at one time. Well, that time is not right now. As a matter of fact, the economic data, they're basically tucking their hands under their booties and sitting on them so they don't trade. All right, let's get into the equities here. Like I was talking about yesterday, what was Tuesday? Monday was an indecision day there. And I got to get my days right here. Yeah, Monday was a indecision day there. We talked about it. Yesterday was going to really be the determining factor. Are we going to go up and test that trend channel, or where the 50-day simple moving average is lining up with my trend channel now? That was going to be the real deciding factor. Yesterday, I got confirmed that we're rolling back over again. So creating a new lower high here on the markets here. So that's continuing that pattern. Are we going to get a lower low? That's what it's looking like right now. But everybody's going to keep that eye on in NASDAQ 11,250. All right. That's the number we're going to be watching to hold if we start to sell off. Now, I don't think we're going to get down there today necessarily. I think that we're going to kind of march our way down that way as we built up a nice little bottom. It's going to be hard to punch through that on another round. So that said, we've got the Dow Jones Industrial Average, very similar pattern. I talked about this for the last several days. We've gotten these patterns continuously looking very, very mirrored image, for lack of a phrase here. But at the end of the day, we go from Dow Jones, NASDAQ, E-mini, S&Ps. Every one of these charts is the same. You can see I'm actually changing the ticker symbol up there. But again, making another move. Nobody tested the 50-day simple moving average, creating a lower high, I should say. Now, again, E-mini S&Ps finally finding that 38,000 or 3,800 area. That's where we looked for support last time. We blew right through it the first time, but this bout we're coming in and finding it as support. You can see it acted as resistance. Once we blew through, that was the resistance area, but now it's acting as a support there. E-mini S&Ps overnight. Well, let's take a look at yesterday first. We came into the day, it was a little bit long, got a push off of that economic data. That's what I was talking about. We could see some upward momentum right off the bat, but then we got the Richmond Fed there, and we can see that really caused the markets to sell off for the remainder part of the day. There was just nothing in the data points yesterday that was going to make that turn around. I mean, we even got that consumer confidence number coming in lower than expected. It was still pretty decent, coming in at 98 yesterday, but it was expected to be 100 and well off the previous number that we got there that was around 106. They did revise that number down, so consumer not super confident across the board as we saw yesterday in those data points. So all that being said, consumers not super confident. We've got a pretty light week. It's going to start heading into the weekend with people packing their bags for the 4th of July weekend. So Friday morning is going to be a little bit crazy. I think that we're going to see a little bit of upside again on Friday maybe, and then that continuation to the downside as that volume starts letting up there. All right. So again, with today being said, it could be more of a consolidation day. Not a lot of economic data. Folks are going to be listening to the talking heads here and seeing if they have any insight as to what they're going to give us as the direction. Folks, all these guys are going to be talking about is higher interest rates based on what's going on with inflation and everything else. So I don't expect much different other than I'd be leery of upside, any type of rips to the upside. That's when we're looking to cover calls, just like I talked about yesterday on that open. That was your opportunity to sell some covered calls at really good levels on underlyings you own. We're going to continue to look at that. I'm not looking to sell puts in anything right now to add to my portfolio until we start finding a nice bottom, get a recovery, some economic data that shows something good. But in the meantime, I'm trying to lower overall cost basis in my portfolio, doing covered calls, trying to find directional moves to the downside, adding in credit spreads because volatility is so high. We talk about all these things and cracking the code to trading options. So folks, if you haven't signed up for this video series, we're doing a course on everything where we're breaking down trading options, what you should look for. I'm trying to make you guys think about levers and pulleys, not just saying this is the right time for a specific strategy. I'm making it so that you guys can make that decision on your own, right, going forward. I want to teach you guys how to fish is basically what it comes down to. That's all I got for you guys. Hope everybody has a great trading day and look out for the bottom. If you can't take that, take it easy.